Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I try to answer your questions and reply to your comments to the best of my ability. And I think that's very important, to the best of my ability. Sometimes my ability is severely lacking. Now, before I move on to your questions or comments, a few things I just want to talk about first. Yesterday, I released a video on Anzac Day, a reaction to a Motley Fool article, 10 best shares to buy today in Australia. And funny enough, on my walk this morning, as always happens, I had some great thoughts. Maybe that's why I love the morning, because that's when all my ideas come to fruition. Or maybe not come to fruition, but that's when I do have some really good ideas. And I thought, as I prepared for that video, I wrote all the metrics down on a piece of paper. And I was thinking this morning, why not just let ChatGPT do all the work for me? I could have wasted all this time. Now, to be fair, probably took me 10 minutes to do all that. Not a lot of time. But I thought, why not just see if ChatGPT could do it all? So I just asked a question, fairly involved question, I thought, and I wanted a table, and it came back significantly incomplete. Yes, in fact, there was a lot of NAs for some of these companies. In fact, Domino's Pizza and NextDC had completely NAs for all the metrics. I did reframe the question a little bit, and it gave me full numbers for Domino's Pizza. So I think this comes back to how you frame the question. And I do think there's a little bit of skill in how you ask questions to ChatGPT. And I think it does take a little bit of time to know how to frame those questions. And I think moving forward, that's going to be very important. And this is something I'm going to be doing more and more. Try to see if I can frame a question, or just give me a table full of complete numbers. And another thing I'm going to mention here when it comes to skill, because I'm in front of a desk, just using a computer, and I just mentioned there is a bit of skill to this. I actually did make a viewer invisible to the channel the other day. And the reason I made this viewer invisible was because this was the working from home person who believes working from home, if you're able to work from home, then automation can do your job. And his reasoning, or her reasoning, is that there is no skill. If someone works in front of a computer, they have zero skill. That was the implication. If you work in front of a computer, you have zero skill, which is an absolutely absurd, ignorant frame of thought, ignorant way of thinking, because there's a lot of people who work in front of a computer have significant skill, amazing amount of skill. And I think this person obviously does not know how the world works. Maybe this person had their girlfriend or boyfriend stolen from someone who works in front of the computer, and they've always been turned off by that sort of thing. Don't know. It wasn't that comment that I made them invisible. It was that the next comment, in reply to someone else, they tried to gloat how much money they make and not try to infer that everyone else makes way less money than them. And that was an obvious and instant turn off from me. I don't like when people do that sort of thing. So I immediately made that person invisible. And that means they can watch my videos, comment all the time on my videos, but no one will be able to see their comments. So I don't mind constructive criticism. I don't mind if you have thoughts different than my own. That's good. That's how we learn. The way we learn is to take on different thoughts, different opinions, and try to integrate into our own thoughts and opinions. See if they work, see if they don't, that sort of thing. So I don't mind that. But when you start to gloat about how much money you make, yeah, that's a massive turnoff for me. Anyway, so that person is invisible. And I'm not sure if I can make him invisible. Haven't even thought about it. Okay, now on to your questions and comments. And let's go back to, this is in regards to another working from home. And I just want to clarify a few things in regards to working from home. I do think working from home should be an option. Working in the office should be an option. Now, there are going to be some employers where working from home is not an option. That's okay. So if you're a plumber, there's probably a great chance you can't work from home. You can't go to a house and fix the plumbing from home. Maybe in the future there will be the technology, there will be robots able to do that. But at this point in time, you can't do it. So that's not possible. But if there is an option, I think it should be a choice. It should be a choice for people and the employers. And if there's some employers who there is an option that the employees can work from home or in the office, and they choose that it's mandatory for people to come in the office, I think they eventually will see a bit of problem moving forward because they won't be able to attract the staff in the future. So I do think there needs to be an option there. And I'm glad that the Liberal Party, the coalition, have gone against making working in the office mandatory for government employees. That was a massive turn-off for me. In fact, it was one policy that would make me not vote or want to even think about voting for the coalition. The only thing I'm just going to mention here is Trader Hooper just mentions some people like Kneppy obviously have great self-discipline. No, actually, that's not true. I would say I don't have great self-discipline, but the main thing about my job, it's really structured, extremely structured. And the reason I say that is because I have a 12-hour shift, so I have to start at a certain time, finish at a certain time, and during that 12-hour period, there are products due at certain times. So you need to complete the product by a certain time. That is structure, and that sort of structure works really well for me, or I am well suited to that sort of job. I need structure in my job. I do need structure. The rest of my life, I don't need that much structure. I'm a little bit more spontaneous at times, but even in my normal life, I do have a little bit of structure. Like in the morning, I like to go for a walk. At certain times, I like to watch TV, that sort of thing. I like to eat breakfast, dinner, or lunch at certain times as well. So there is a little bit of structure, but my working life, a lot of structure. I need structure. So sometimes we have these shifts where we don't have a duty list. It's like free reign. And those shifts, I don't get much done. I don't get much done unless I need to do something. So a lot of times we do have to do quizzes or something like that to refresh our memory, that sort of thing. And when I do have that sort of thing lined up, yeah, there is a bit of structure there. But when I have nothing, no plans on a day shift where there's no duty list, yeah, I'm all over the place. So it's not that I have great self-discipline, it's that I have structure, and that is really important. The way to solve that, if I was working a different job, I'd probably have to develop some sort of list at the start of the day. These are things I want to do, and then tick off that list. So that's probably the way I would solve that if I had a different job. But yes, I don't have great self-discipline, but I have structure in my job. So thank you for that comment. Now on to VB Ed. I think I said that right. Thank you, VB Ed. Hey, Kneppy, you talked about Saul Pattinson. I noticed last week that Saul Pattinson have just purchased a large shareholding in MonashIVF. Perhaps they are seeing potential value in the company at the current low price. Yes, they did. In fact, the other thing is MonashIVF received an aware letter from the ASX. I did not have a look at the aware letter, but I'm thinking and just assuming it's regards to that announcement, that mishap they had, and they did not release that information when it happened to the market. And I think the ASX is just asking Monash why. Share price fell, was at 35% on the day. This was announced to the market, and this could be an overreaction from the market. We see this time and time again on the stock market that people react quite negatively. They see a bit of risk. They overreact is another way to put it. And this does lead to opportunity. So this is potentially true to Monash or for MonashIVF. We saw this with ResMed in September 2023. Share price fell off significantly because of the perceived threat of Ozempic. And Fishbowl also mentioned here, talking about Chipotle. This happened to Chipotle many, many years ago. There was a case of food poisoning. Share price dropped significantly. I've heard this story a few times now. I wasn't following Chipotle at the time, but the share price fell a lot. Cases of food poisoning don't last long. And I'll be honest with you, this would be, just after this, would be the best time to go to Chipotle because the chances of food poisoning happening again would have been remote, would have been so low. There would have been people scared off going to Chipotle, but that's the time to go. That is a time to go. Like the best time to fly in history was just after 9/11 because the security at that point was great. And I know people who just refused to fly because of the fear that something bad was going to happen. But I can almost guarantee you that was the safest time to fly in human history. So there is a chance this could be an opportunity. And we also saw Just James said they bought 12.7 million shares around 80 cents. Let's just have a look at the chart. Well, by the way, there's Chipotle. So I actually looked at this comment and I was wondering, when did this happen? When did this happen for Chipotle? It was back in, I think it was 2018. Share price fell to like $5. Yeah, $5. Share price now $51.78. So this has been a 10-bagger for those who were brave enough to buy Chipotle shares at that point in time. I'm assuming that's why the share price dropped to that low. Now, not Saul Pattinson, MVF. Share price did drop a lot. Ooh, we have to go to where we are now. So we can just use this little arrow. Oh, we're right there. So share price has dropped a lot. I also like to have a look where the share price is in relation to history. So back during the COVID-19, share price of Monash dropped to about 37 cents. So that was peak pessimism. And the share price is now about 79 cents. So potential value when it comes to Monash IVF. Now, maybe the brand has been damaged. And there was a little comment here from, VB Ed, who mentioned the best thing going forward for Monash IVF is to change the name of the company. And I actually would think that's actually would be a good idea. That's probably the only time I think it's a good idea to change a name. So there is still a bit of risk moving forward for Monash IVF. I do think they'll probably have insurance, so it wouldn't significantly affect the company in terms of financials, but it's just people trying to use the services that could affect them. But again, just like Chipotle or air travel, probably the best time now is to use Monash IVF because this won't happen again. I can almost guarantee you this will not happen again for Monash IVF. So if I was wanting to have a child and using IVF is the only way, Monash IVF would be probably a good choice moving forward. Thank you for that, VB Ed. Now on to Fishball 1634. A TV show recommendation for you, Chernobyl. It's only 5 episodes and 1 hour each. If you haven't seen it, you'll love it. Yes, I watched it. As soon as it came out, I watched it straight away. And in fact, one of the reasons I started watching The Last of Us, not the only reason, one of the reasons I started watching The Last of Us is because the same creator of Chernobyl created The Last of Us, and I thought that was a good sign. It was going to be really good. And then I saw that Pedro Pascal was the lead in The Last of Us, and that was a massive green flag. Didn't care about the female lead at all. And then the story, I saw the story. Not played the game, never heard of The Last of Us, the game. I don't play video games at all. I do like the subjects. That sort of done well. That sort of topic is really good. I really like the first series. I'm not sure about the second series because of what happened with Pedro Pascal's character. I'm not sure if that's the right way moving forward because in my opinion, just my opinion, he was the best character. Anyway, that's just my opinion. Anyway, so yeah, I've watched Chernobyl. You cannot recommend Chernobyl enough. I think Chernobyl, yes, if I could recommend any show, Chernobyl would be one of them. Not the only show. I'd recommend a lot of shows, but Chernobyl is one of the shows I would recommend to anyone who asks me. If I was asked, what show should I watch? I'd give them Chernobyl. Well, not only Chernobyl, I'll give them a lot of, because, it depends on the person as well. Some people just like comedies, so then I'd say The Office or something like that. Anyway, Fishball also asked, Fishball is getting a lot of comments and questions. When will you sell CGF? I can see it going over $7, but there will be a lot of resistance at 8. Daiichi Life bought 50% at $8.50. Then days later, company announces Japanese sales 240 million up, 33%. Do you hold RUL? Yes. I really like this stock, especially after a recent pullback. I see here new high one day. Okay, CGF. I have so what I do with trading stocks. So this for me, this is more of a trading stock than a long-term hold. The main reason behind that is if you have a look at the weekly chart, there's no uptrend. There's no uptrend, maybe some value sometimes here, but I just trade this one. And I decided to buy CGF when they announced that significant holding with Daiichi, and the share price, I thought should have rallied to $8.50, but they released that, if I remember correctly, on the 7th of April, which could have been one of the worst times to release. Yeah, there it is, on the 7th of April. And if you remember 7th of April, that's the day that our market fell by a fair bit, but there was an intraday recovery. So Daiichi Life requires minority investment in Challenger, $8.50. And I thought on that day, the share price should have rallied a fair bit. it only rallied 8.3%. And I think if that was a positive day, the share price probably would have rallied 15 to 20%. So I do think the market underreacted to this announcement. And that is one of the reasons why I bought. And then they released on the 17th of April a bit of an update. Yep, the third quarter update. And the third quarter update was pretty positive. And that's why we've seen the share price take off. So, yeah, so at this point in time, I am trading this. I have no reasons to get out just yet, just based off the chart. The top of the trading range is around 760 to 780. So if it gets above 780, that would be really positive. So, so Challenger is moving into a resistance zone, we'll call it. And the reason I'm saying that is if we have put in a rectangle, what we'll do is we'll put in a rectangle right there. There it is. So you could even lower it a little bit more. The reason that's where the share price is right now, $7.10, it's just entering a resistance zone. If you go back past the last 4 years, share price of Challenger has got into this zone 1, 2, almost 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times and has pulled back. So this is a resistance zone. So every single time the share price gets into the zone, we see selling coming in. So there is a bit of resistance from 710 all the way through to 780. But if it gets above 780, that means the share price is a long-term low, high, not low, high, and that means there's less resistance moving forward. There's still a little bit of resistance because share price was higher in the past, but I'd say there's less shareholders in Challenger right now who are holding shares in this company for the long term, if that makes sense. So yes, so I have no target for Challenger. I don't have targets when I'm trading. I just look at the chart. At this point in time, I have no targets. So a lot of resistance at $8. So I'd say there's a lot of resistance, yeah, just below $8, I'd put it. And RPMGlobal, this is a company I wouldn't consider RPMGlobal. Where is it? RUL. That's right. We'll put RUL. RPMGlobal. Oh, that's right. RPMGlobal is one word. This is a company I own for the long term. I would not consider RPMGlobal to be high quality, but I think it has the potential to be high quality, and I'm willing to hold this company for the long term, even though it's not high quality. It's profitable, that sort of thing, and it's growing quite nicely. So I have no qualms about holding this one for the long term. So this is in my super. And typically, companies in my super, I don't really follow all that closely. I'll have a look at the charts on occasion, have a look at the announcements on occasion, but I don't really follow these companies all too closely. So for me, RPMGlobal is a long-term hold. And yeah, there was a bit of a pullback recently. Now, if I was trading this, I'd probably be out of it just because it's actually in a bit of a downtrend right now, but I'm not trading it. Okay, Just James Dean says, please help identify the support line, if any, for current Flight Centre share price. Thank you. Funny enough, I was looking at this last night. Yes, I was looking at this last night. I'm going through charts of companies, and I went through one of my watch lists, which is the transport, travel, and leisure. I have a transport, travel, and leisure, as I say in America, watch list, 47 components or constituents. And one of those companies is Flight Centre. So I went through this last night, and the chart itself, the daily chart looks pretty ugly. Looks pretty ugly. This is a pretty ugly daily chart. Now, you could say and argue maybe this is a high-quality company, and the valuation of Flight Centre is becoming more and more attractive. Have a look at the weekly chart then. So usually what I do is have a quick look at the daily chart, and then I have a quick look at the weekly chart. I've tried to do this. Have two, what do you call it? Two panels, and one weekly, one daily. I just can't do it. I just can't do it. I've tried and tried. I just can't do it. I need one panel. And then what I do is just go from daily to weekly. Not all the times. But anyway, so if you have a look at the weekly chart for Flight Centre, share price during COVID-19, or the bottom of COVID-19, was at about $9. And the share price did break through support, which was about $14. And I would say the next major support level, I would say there's a bit of support about $11, a bit of support about $10, and a bit of support at those COVID-19 lows. And I'd say if it does get that low, there could be probably an argument that this is looking attractive value-wise. But the very fact that Flight Centre's dropping a fair bit, Hello World's dropping a fair bit. We're also seeing corporate travel management dropping a fair bit. We had a really negative release from that travel company. What was it called? What is it called? Is it THL? Tourism something? Tourism Holdings. They released a really negative update the other day. So there is a bit of negative sentiment right now in the travel sector, and that's why all these company share prices are dropping a fair bit. Flight Centre also has a cruise around the world in 371 days for only $99,990. I could not think of anything worse. I'm not well suited to cruises. I'm not well suited to cruises. I'm not well set. I'm not a good person for going to the one place for a week and just staying in this one place for a week. I would hate that. I do hate that. So I need control over where I'm going. That's why I like to hire a car and just go on the road. Oh, that's the best sort of holiday for me. Yeah, I cannot handle, say, going to, going to Bali. Not for me. Plus, Bali itself is not for me. And cruises, not for me. If I was controlling the cruise, if I could go to any place I want, yeah, I'd do that. But you don't have any control. Trader Hooper clarified the Freud-Einstein question was supposed to be psychology versus science all the way, or psychology does have its place, and you could also say that psychology is a part of science. Let's ask that question to, is psychology a part of science? I always can't spell psychology. Is psychology a part of science? Is psychology a part of science? Yes, psychology is considered a part of science. Classified as a social science and also sometimes as a natural science. So in a way, psychology is science. But if I had to choose between psychology and science, I'll choose science. And I like the way you turned it into a discussion of two great scientists. Was that Newton and Einstein? It is amazing what people discovered with so few tools 400 years ago, or even earlier. I've never really thought of Newton as one of the greatest minds in history, but then I started to read a little bit more and more and more, and then you have to come to a realization that even though, not even that. I was going to say even though he lived in a time that was a little bit backwards than where we are now, that at that time, what he was thinking, what he came up with, and not only that, what he came up with was extraordinary. So he came up with calculus. He invented calculus, which is extraordinary in itself. And this all happened. This is something else I did not know. This all happened. Newton's discoveries happened. Discoveries, or what do you call them? Happened over a few years when he was 26 in lockdown. Something like that. There was some sort of illness going around. Yes, that's basically true, yeah, but with some important details. Newton made most of his most famous discoveries, including early work on calculus, optics, and gravity, during a period when he was around 23 to 24, not 26. Okay, I thought it was 26. He left Cambridge University because of the Great Plague, the bubonic plague, but that forced the university to temporarily close. So during this lockdown, often called Newton's annus mirabilis, year of wonders, he developed the basics of calculus, which is extraordinary, began formulating his theories of motion and gravity, conducted experiments with prisms and light. And just remember, he was 23 to 24 years. So that's just extraordinary that in a few years, I've always heard it was like 1 year, he did everything. And this was thanks to being locked down virtually. So as you discover, it's really weird. As you start to learn more and more, you realize how little you know. There's that saying, ignorance is bliss, but is it really? It's really funny because, the more you know, the more you realize you don't know, which is extraordinary. Extraordinary. So much I don't know. Anyway, so thank you about that, Trader Hooper. Another one from VB Ed. From what you presented, my feeling is that the safest indices to invest in at the moment is the DAX and ASX. I'd have to say the DAX. DAX is doing wonderfully well. Well, it saw us up a lot the other day. It's rebounded beautifully, beautiful V-shaped recovery. Can't say the same thing about any of the American indices. In fact, if you have a look at the Dow Jones right now, it's still looking tepid. Tepid is weak, I believe. Tepid, slightly warm, lukewarm, showing little enthusiasm. I thought tepid meant weak, but there we go. Learned something new. So yeah, DAX, ASX looks okay. I wouldn't touch the S&P 500 with the barge pole. Do you have a barge pole? I don't, but maybe you do have a barge pole. The USA is headed for a deep recession. Are you calling it? Oh, yeah, it's because what I do for work is based off probability. And we make calls all the time. It's sort of a fun thing we do. So there is one of the models has a tropical cyclone heading straight for Brisbane in a week's time. We'll never say that's going to happen. But if a few models have the same thing, and after a few runs, they keep bringing this tropical cyclone to Brisbane, eventually we're going to call it. You have to eventually make that call. Am I going to make a call? By the way, there is no tropical cyclone heading for Brisbane right now. No. Anyway, the USA is heading for a deep recession. Are you willing to make that call? I'm not making that call just yet, but I think there is a good chance. I'll say there's a good chance. And the US dollar is going down fast. In the future, please do a video analyzing the Aussie REITs. To me, they offer the best and safest returns. Funny enough, I started looking at REITs about 2 years ago. And I went, no, hold back. The first REIT, I still remember the first REIT I looked at was Dexus Convenience Retail. And I went, no, hold back. Share price was in this downtrend at the time. I said, hold back. I think it was actually, it would have been just in sort of the middle of 2022. And I said to myself, hold back because I know you're way too early to changes in trends, that sort of thing. This has been me historically. I'm way too early to trend changes. I was way too early to lithium twice, way too early to the coal boom back a few years ago. This is me to a T. I'm way too early. And so I thought, just hold back for REITs. If we do see interest rates drop a lot, I think REITs are the place to be. I think most of them are value. A lot of them are of value. And for some reason, Dexus Convenience Retail was attractive to me. It's the first one I looked at. I think it's because the first one I looked at, that's it. But I do have a REIT. Watch list here. Yeah, there is REIT watch lists. And so it was Dexus, was it Charter Hall Long Whale REIT was the second one I looked at. Yeah, so I think there's definite value. There's definite possible value in some of the REITs. There was one I was just looking at before. Was it HCW, a Healthcare and Wellness REIT, just continues to fall. But they're all trading well under NTA, and I would say also their distribution yields are probably attractive. So according to this, Healthcare and Wellness REIT has a dividend yield of 10%. Dexus Convenience has a dividend yield of 7%. Yeah, so I think there is potential value in some of the REITs. But funny enough, I don't own any just now. Sensei 6011 says, thoughts on NIO and XPEV. I don't know anything about these companies. So when I know nothing about a company, let's do what I always do. NIO. Is it NIO or NIO? I always have a look at the overview in FinChat. Now, what you could do is financial and company rundown of NIO. Searching the web. Chinese electric vehicle manufacturer headquartered in Shanghai, blah, blah, blah. Some financial overviews, looks pretty nice. Key developments. Okay, I don't know if any of this is true. I'd say it is true. but it gives me an idea when the company does. Let's go back to FinChat. FinChat says a company designs, develops, manufactures, and sells electric vehicle, says smart electric vehicles in China. Offers 5- and 6-seat electric SUVs as well as smart electric sedans. Now, sort of interesting. And it seems like China is taking the lead when it comes to electric vehicles. Markup is 9.4 billion, 2.2 billion shares on issue. Revenue is in one. Is that one? I suppose. What's the currency of China? Geez, currency of China. One. Yeah, I was right. But I need conversion. Yeah, Australian. So it's a 1 to 5. So 5 Australian dollars. No, wait there. 5 yuan to an Australian dollar. So divided by 5, you get Australian dollars. That's probably the way to do it. So a fair bit of revenue. Geez. So divide 65.73 billion yuan. That's 13 billion Australian dollars. A lot of employees, gross margins, 9.9%. Looks like they're not profitable. Not profitable. A really nice revenue growth, 55.3% over the last 5 years. I'd also like to have a look at the total returns over the last, we'll go max. So total returns are negative. Oh, look at the share price. It has dropped a lot. Other than that, I don't know anything. But at this point in time, it's a little bit early for me to be thinking about this company. If you look at the financials, I always like to have a look at total revenue. So revenue is growing. That's a good sign. You also want to see gross margins. Hopefully they're rising. Sort of. Well, not really. Operating margins not relative yet. What's that word? It's not useful yet because the company is still loss making to a huge amount. So let's have a look at the chart. So I could not consider this company to be high quality just yet because it's not profitable. Now, so for me, that means either you need to be very bullish about the future of this company and the space they're in, or just trading. And I would not be trading this just yet. Still in a downtrend. Do I have this company in my watch list? Let's have a look. I don't. I'm going to put it into my watch list. There you go. So that's NIO. And the other one you asked was XPEV. So I'm assuming this is the same thing. XPEV. So what you can do is just same for XPEV. Same for XPEV. Let's have a look. Oh, it looks like cars. Nice pictures of cars. Oh, Chinese smart electric vehicle manufacturer. Let's go to have a look at what XPEV. Yep, same sort of thing. Markup is a little bit more than NIO. Looks like revenue is a little bit more as well. Gross margins positive, operating margins negative. So this is another company that is not profitable. Revenue growth 77.5% over the last 5 years. So really nice growth in revenue. But again, that has not translated to profitability, and total returns negative 1.2% since they listed, looks like, in August 2020. So for me, these companies are still, I wouldn't say they're story stocks, they definitely are selling something, but they are car manufacturers. And don't forget, during the start of car manufacturing in the United States, there was hundreds of car manufacturers, and eventually that whittled down to not a lot. Amount of car manufacturers USA in 1910s. Maybe 1920s is better. There we go. In the 1910s, the United States had an astonishing number of car manufacturers, over 250 at the peak. So 1910, 275. 1915, it was declining slightly, but we're still well over 200. Industry was very fragmented. Most companies was tiny and produced only a few dozen or few hundred cars per year. And then it just dropped and dropped. So I would say not all these car manufacturers will survive. Smart electric car manufacturers will survive. And let's have a look at the chart for XPEV. The chart has turned around, a little bit more positive with this chart. The other thing I should mention is same thing with bicycle manufacturing. Back in the late 1800s, there was a lot of bicycle manufacturers. Bicycle manufacturers. Late 1800s. There we go. 1898, 300 bicycle manufacturers in the US. Chicago had 80 bicycle companies. The bicycle craze, 1890, 1990, 1900 was massive. Thousands of small shops made bicycles or parts. And what happened? There was just too many. Yeah, so, I mean, that is a nice little lesson that when you do see something expanding or growing at a significant rate, like bicycles in the late 1800s, cars in the early 1900s, there's going to be a lot of participants in that space, and most of them won't survive. That's all I'm going to say about these two companies. But other than that, nothing else. Fly in Kiwi. There you go. Fly in Kiwi. So fly in, fly out, I suppose. Kneppy Invest, would you please consider an update on Kaiser? The volume has increased to roughly 2 or 3 times their long-term average, and they're expecting to approach 30,000 ounces produced in financial year 26, having acquired Henty Mine in Tasmania for a pretty good deal. Medium-term target of 50,000 ounces. Also, Audinate just released an upside price target of 43 cents, which leaves 100% upside. Again, I don't really follow any sort of broker recommendations or target prices or anything like that. Not sure if they had a time frame for the price target, but I will be surprised if it isn't reached before year end. The target appears somewhat conservative from my standpoint, but I'm looking 5 years ahead. Kaiser is my biggest holding, but I'm highly likely to keep adding to it. Okay, I'm pretty sure there was another question about Kaiser. Maybe it was from Flying Kiwi as well. I'm pretty sure I either mentioned Kaiser or I had a look at Kaiser not that long ago. And I can't remember why. It could have been just a purchase of, yes, it would have been this one, transformational acquisition of the Henty Gold Mine on the 24th of March. And the share price on that day rallied. Oh, it didn't rally at all. It must have been something. It was something to do with that. And I think I just mentioned, if I did mention it, this is the sort of thing I like to see for these type of companies. I like to see them acquiring mines that have had a history of production, because a lot of times what you see is the bigger miners sell off these smaller mines because they don't provide anything to the big mine companies, but it can be transformational for small mining companies. We saw Northern Star do this back in 2010. They bought a small mine from someone fairly cheaply, if I remember correctly, and it transformed the company into the biggest gold company on the ASX now, or the second anyway. Anyway, so I haven't really had a look at this one for Kaiser. I'm just shocked. I thought the share price increased a fair bit on that day. Now, if you have a look at the company's cash flow, what they've got in production now is just not doing it for me, probably not doing it for the market either. So if you have a look at the most recent Appendix 5B, receipts for 3.2 million, operating cash flow negative. So maybe this is a transformational acquisition for the company. Maybe. We'll say that maybe. So obviously you're confident, and you probably know way more about this one than I do, because I have not had a look at it. Okay, so a few things. Share price going sideways. So share price did nothing on this announcement. And as Flying Kiwi mentioned, look at the volume increasing. That can be a really good sign. That can be a really good sign that there could be some fund managers or some big players taking a position in a company. And I do like to see this really big volume coming in. So it started on the 24th of March. So was that acquisition? And we've seen that high volume continue. I do like that. Now, that does not mean I'm going to take a position. So at this point in time, there is a difference in conviction. It's very important. Conviction is very important. So you're highly convicted. You have high confidence in what Kaiser Reef is doing. I'm probably not there just yet. But I do like these sort of acquisitions that these smaller mining companies do make. And I probably do need to have a closer look at this one, because There's a chance if I really, really like this one, I will take a small position, initial small position, because I do like that volume coming through. So thank you for that, Flying Kiwi. John, GTG2, I'll just say John. John says, hey, Kneppy, what super strategy do you use if you have one at all? Thanks. And I was thinking, super strategy, I don't call any of my strategies super or great or anything like that. Then I realized this means superannuation strategy. I had a bit of a brain fart when I first saw this question. What superannuation strategy do you use if you have one at all? Yes, I do have a strategy for my super. So I don't trade my super. So any companies within my super, I don't trade. So I use Netwealth, Super Accelerator, whatever it's called. So I can trade any company on the ASX. I can trade or hold any company on the ASX, plus any companies on Netwealth. I can tell you right now, if I can find it, exchanges to trade. No. Super Accelerator Plus. Let's see if we can have a look at it. Here it is. So I can trade in, and you can't trade every single company within these exchanges. So I can change New York Stock Exchange, Nasdaq, London, Toronto, Euronext Paris, Deutsche Börse, Germany, Euronext Amsterdam, Tokyo, Hong Kong, Swiss, Brussels, Copenhagen, and I do think I own one company in Copenhagen, Stockholm, Singapore, Italy, and Madrid. And then you can open up this, let's have a look. We'll open up one of these rare little companies or little exchanges, Belgium. So which companies on the Belgium exchange? Oh, doesn't exist anymore. Here we go. On Hong Kong, they'll give you a list of all the companies you can buy. Approved securities, they call it. So, for instance, quite a few here. We're trying to open up one of the smaller ones. Copenhagen. No. Netwealth, you got to fix that. Oh, Netwealth, you do have to fix that. It's not good. What about Tokyo? You're going to see some companies, that are fairly big here. For instance, Canon. What else? Fujifilm, Fujitsu, Honda, Motor, Hitachi, Japan Tobacco. If you love Japan Tobacco, this is the company for you. Yeah, so it gives a Mitsubishi, a lot of Mitsubishis, NEC, Nippon Telegraph, Nippon Steel, which I have heard of, Nippon Paint, Nintendo. Yeah, so I just like, maybe they're going to increase this in the future, but it's great. It's great, absolutely great. Anyway, so back to my super strategy. So what I have decided to do is I'm going to keep my long-term, my high-quality companies in my super, and also some of my smaller companies that I just take a small position in. And then if they continue to grow, continue to show some bullish signs, I might add to those positions. And that's my strategy for my super. So my longer-term positions. All my international, not all of them, but the vast majority of my international companies are in my super, and that is a strategy. Outside of my super, I'm more likely to trade, so in and out fairly quickly. So hopefully that makes sense. So trading strategy outside my super, my high quality long-term holds are in my super. Trash boat. Let's see why I've included this one. Trash boat says CBA added 33 points to the SGO, arguably treated as a gold type of investment by retail investors, at least in the short term, regardless of absurd PE. Yep. This volatility is going to continue as long as Trump persists as he creates continual uncertainty. I cannot envision an event that creates certainty, given the variables in play: tariffs, US debt, inflation, earnings, isolation, transition to autocracy. There's nothing much to debate there. I still think there's a lot of uncertainty in the world. I think the uncertainty right now is a little bit lower than it has been because Trump is caving into a lot of stuff. He's caving in every single day. He's caving into more stuff. I'm not sure if he's being pulled by some more reasonable people in his administration, or if this is just a bit of a lull in his madness. I'll call it that, madness. I'm not sure if he has a plan. Not sure. I have no idea. And Trader Hooper also says CBA finished up 4%. Time recording, oh yes, I remember this day. CBA was up 4% in a day. Just imagine his rant if you'd seen it at the close. Yes. Yes, there's zero chance I would take a position in CBA right now. I just don't understand why anyone would be buying CBA. And it's all about risk and reward. It's all about risk and reward. What's the reward you're going to get from CBA moving forward? A nice little dividend. What's the dividend yield? 2.88%. Why would you want that? The dividends aren't going to increase all that much. So the risk in holding CBA right now is really big. There's really high risk on holding CBA right now because the company could, I think it's just sentiment. But right now it's just sentiment. It's just insane what's happening with CBA. So I'm not going to rant anymore on CBA. People can do what they want. Fund managers can do what they want. They can buy CBA. And if I was a member of a fund manager and they were buying CBA now, I would say, or I would question their decision making. I would severely, significantly question their decision making if any fund manager that I was involved in was buying CBA. Motivational Flavio says, Kneppy, I'm not sure if you covered it, but what are your thoughts on Energy One? It just keeps on going up in this market. This is a small cap company I owned for many, many years and I sold out. I should not sold out of Energy One. And this should have been in my super. And I should have just kept on holding it. But would I buy right now? I think the answer to that is no. I would not buy Energy One right now. I think a little bit too much hype in this company. Market cap is 366 million, so it's a little bit too stretched, the valuation. P ratio 83. Nice growth in revenue, so we're talking about between 25 and 30% per year. Earnings per share a little bit lower, so a little bit of I think they've been making some acquisitions, that sort of thing. So earnings per share not quite as good as the revenue growth. Return on equity is at 9.2, return on invested capital 6.1. So I'd like that to be a bit higher. Gross margin is 42%, operating margin is 14%. I'd like that to be a little bit higher. But yeah, P ratio 83.4. It's a little bit too stretched for my liking. And the share price has gone on a really nice run. So I do think there is a bit of momentum driving the share price higher, not necessarily any financial news. So yeah, the share price has just gone bonkers in the past year. So 1 year ago, the share price was $4. Now it's almost $12. So it's almost tripled in a year. And yeah, I would not be buying this right now. Even though I do like the company, the valuation is a little bit too stretched. And the funny thing is, the share price just keeps on going up. So there's something, maybe the market is seeing something that I'm just not with Energy One. But yes, but there's a lot of opportunities in the market, I think. Ben Hutchinson says, Stealth Group. This raise is a company tactically, how do you pronounce that? Tacitly admitting they are currently overvalued. Glad I sold down, but not out in the heat. I did exactly the same thing. I sold down, but not completely out. It was my largest holding, and then I went, I don't know if I could justify Stealth Group being my largest holding. The whole reason I bought Stealth Group was only as a trade, and share price kept on going up. And at some point, I just went, I've just got to take profits, but I didn't want to sell out completely because I could be wrong. And I agree. I think they're admitting, hey, we're overvalued. And what should company's management do when they're overvalued? They should actually do capital raisings. Yes, they should actually do capital raisings. So you know what a strategy could be? I don't know if any company has done this before. You do a capital raising when you're significantly overvalued, or maybe not significantly. I wouldn't say Stealth Group is significantly overvalued. And then if the share price drops a lot, you do a share buyback. And that creates value for the shareholders. It creates significant value. So you do a capital raising. Say you raise, say, $20 million at a share price of $1. And the share price falls to 50 cents. What do? You use that $20 million to buy back shares and you create significant value for shareholders. So I do believe, I'm not sure if that's what they're thinking, but if this capital raising was for an acquisition, I could see it, but it really wasn't. So I think they just went, hey, the share price has risen a lot, and now's a really good time to raise some capital. So I can't blame management for doing that. And that's because that's exactly what management should be doing in these sort of companies. So I took a trading position in Stealth Group back in September 2023. The share price was 15 cents. It was just a small cap company. They also had a 5-year goal plan. And I thought, looks pretty good value. I think the PE ratio at that point was like 10, or maybe even lower than that. It looked a little bit weak about a year later. So it didn't do much for a year after I bought. And then for some reason in late 2024, share price just took off. That's Stealth Group, but I did take some profits. Stewpercy says, so I can't answer this right now, but would love you to look at some more tech stocks. And I am doing it. I'm looking at more and more tech stocks. I think even some of the companies I'm looking at are not tech stocks. What I have is I've created, where is it? What's it called again? Oh, USA Stocks Applaud watch list. And I've been putting in this watch list companies that I do find interesting. And one of the most recent companies I put in, I haven't got it in here. One of the companies I did find really interesting the other day was a company called, where is it? MEDP, Medspace Holdings. It reminds me of Cogstate on the ASX. So they provide clinical research-based drug and medical device development services in North America. So the company just reminds me of Cogstate. It offers a suite of services supporting the clinical development process from phase 1 to phase 4 in various therapeutic areas. Market cap is 8.7 billion, so a little bit bigger than Cogstate. But they have gross margin 68%, operating margin 21%, return on equity 47%, revenue growth about 20% per year, earnings per share growth about 35% per year over the last 3, 5, and 10 years. No dividend, but it's okay. P ratio 22.2. And I went, well, that sort of growth, that sort of return on equity, and P ratio is 22.2, fairly low historically, and the share price has pulled back. So I was looking at this company. What's the ticker again? MEDP. Never heard of this company before. They had a slight bit of weakness in the most recent quarterly. That's why share price has pulled back. But if you have a look at the weekly chart, and we've put in the 200-week moving average, that's a beautiful chart, and the share price has pulled back, or did pull back the 200-week moving average, and I went, this could be a nice little buy. We saw this happen in 2021 too. Share price pulled back to the 200-week moving average and it was a buy. But this is the most recent company that I've looked at. It's probably why it's not on my watch list. MEDP. So this watch list is, I think I want to turn this watch list into, this USA Stocks Explored watch list into companies that I think are at least quasi-high quality that could be interesting as a purchase in the future. Particularly companies I've never heard of before. And this is one of them. Medspace. So we'll put in this. For some reason, it didn't go into my watch list. There it is. There it is. Anyway, so yeah, I like to do more tech stocks. I was going to do is Taiwan Manufacturing Company a buy. I was going to do that one as well because I was having a look at that the other day. I am a shareholder of that company, but I think it's at attractive levels. It was at attractive levels. PTV Fund says, what do you think of A1M, AIC Mines? Let's ask ChatGPT, what do you think of AIC Mines? I'm pretty sure that's what it is. It'd be horrible if I got this wrong. A1M, AIC Mines, yeah. And it's not giving me its thoughts. It's giving me a financial overview, operations and projects. Now, what are your thoughts, ChatGPT? It's giving me some strengths and risks. AIC Mines has shown strong revenue growth, which is I like to see, and maintains a solid gross margin. The company's strategic focus on expanding its copper production aligns with global demand for critical minerals. Risks: the mining industry is subject to commodity price volatility. Yes. And it's the reason why I would never consider mining companies to be high quality, subject to commodity price volatility. And operational challenges, yeah, that's true as well. Investors should consider these factors when evaluating the company's prospects. Okay, so I'll be honest with you, I don't have any thoughts about AIC Mines. That's why I did this. No thoughts about the company itself. We could have a look at this. Market cap is only 195 million. And you can have a look at the share price just all over the place. Did they release any sort of quarterly update? Significant increase in all reserves. We can have a look at the most recent. I'm pretty sure they don't. Yeah, they don't release a cash flow report. So they are copper. I knew they were copper, a small copper company. So we have Aries Resources, we have Sandfire, Aries Resources, Hillgrove, AIC Mines in the copper space. So we have a look at that most recent half-year report. Revenue 93 million, EBITDA 30 million, and the company is profitable. Nice growth in profits, by the way. Company's profitable. I was going to say the profits comfortable, but if you have a look at the cash flow, like to have a look at cash flow. So operating cash flow positive 17.5 million, capital expenditure 16.5 million, payments for mines under construction, probably one-off 20.6 million, and payment for mine properties. So they're still burning through a lot of cash, lots and lots of cash. So I'd like to have a look at why they are burning through lots and lots of cash. So even though they're operating cash flow positive, they're still burning through lots and lots of cash. So let's have a little chart for AIC Mines. So again, the share price of this company is going to be highly influenced by copper prices. And if you have a look at the long-term chart, this is, when you look at this chart, this goes back to, looks like they listed in 2019. So this goes back 5 years. If you have a look at this chart, it's not a chart of a high-quality company at all. So you could maybe buy it when it's near the low. So it looks like it's, I wouldn't say it's trading in a range, but there's no trend here. So I like to look at trends. I like to look for trends in the share price, in the company's earnings, that sort of thing. And you don't see much trend here. Anyway, and let's have a look. And if you have a look at the daily chart, there's not even any trend in the daily chart. And the other thing I like to do sometimes is I like to overlay copper, the price of the commodity, new price scale. Which one did I use? I don't know which one I use. Futures. So, and then I'll get rid of the moving average. There it is. And sometimes I'll just put it into a line chart so we can see how the share price of AIC Mines compares to the copper prices. And there is a pretty big correlation here. In fact, you can see there was this goes back to 2024. So 2024, copper prices went on a bit of a tear, and AIC Mines share price went on a bit of a tear, and then a pullback in the two, and they correspond almost perfectly. Yeah. So anyway, so you do have to have an opinion on copper. So let's go back to that. And so because of that, I wonder if the first thing you should think about when it comes to this company or any mining company is the underlying commodity. And let's have a look at copper and copper prices. And are you bullish or bearish on copper? So medium term, longer term, and also the short term. Me, personally, I just have no idea. Scott says, I don't suppose anyone's watching Cleanaway. I watch a lot of Cleanaway trucks on my morning walks. They always go past me. Cleanaway, and what's that one starting with V? Veolia, which I'm pretty sure is a European company, Veolia. Is it Veolia? I'm pretty sure this is listed on some exchange around the world. I'm pretty sure it is. Veolia Environmental. No, that's the wrong. Where is it listed? I have no idea. Anyway, I see a lot of those trucks go past as well. Cleanaway. Let's have a look at FinChat. I haven't looked at Cleanaway for a while. So waste management, probably simple enough. Market cap is $5.8 billion. They do have a bit of debt. A net debt of $1.7 billion. So enterprise value is a little bit more than the market cap. 2.2 billion shares on issue. Fair bit of revenue, 3.83 billion, 7,900 employees. Gross margins and operating margins are fairly low, which is probably to be expected. So gross margin is 24.5%. I do prefer, I was thinking, how would I define a high quality company? What would be the gross margin? And my number was 30%, so above 30%. I'm not sure if that is right. Maybe it should be 25% or 20%. But definitely if a company had gross margins above 50%, I would consider that not in isolation. I need to look at other metrics, but I would consider that to have the potential to be considered a high quality company. Return equity 3.6 and return invested capital 3.1. That's a massive turnoff. 5-year average. So straight away, I would say the returns you're going to get from this company are going to be quite limited. Revenue growth quite nicely between 10 and 14%, but that could be because of acquisitions. Earnings per share growing at about 7.1% last 3 years, but the last 10 years is actually negative. Dividend yield 2.2%, dividend payout 76%, and dividends been growing at about 5% per year. P ratio 37.1. That's fairly high. That P ratio, it might not be. It could be because of there's a one-off affecting the profit, which is a problem with the P ratio. Price to book 1.9, price of free cash flow 31.2. Does seem to be a little bit rich. Apparently the P ratio is coming down, so maybe some nice growth in profit the next year or so. And finally, the returns, total returns of this company since they listed. Now we'll go to the last 10 years. I don't think this company goes back that long. We'll just go back last 10 years. So total returns, 14.9% over the last 10 years. Now, just because that number is nice and high at 14.9% doesn't necessarily mean this is a good investment, because that number, what I like to see, particularly with high-quality companies, is that total return over a 10-year period. If it was low, if I thought a company was high quality and I saw a total return of like 5% CAGR, that could have been an attractive buy. And for a company like this, with a CAGR of 14.9%, I'll be thinking, it might be a little bit stretched valuation-wise. And I think it might be. If you have a look at P ratio, now if you have a look at revenue growth, now some of that could be acquisitions. I don't know. The other thing I like to look at is shares outstanding. So has shares outstanding increased? They have increased. They have increased 50% since 2015. Again, probably because of acquisitions. But at least revenue is growing. But then one thing I like to look at is P ratio. P ratio is all over the place. It was 265 a few years ago, negative back in 2015. So you're not going to get much from that. So I'm going to have a look at free cash flow yield. In fact, what I'll do is have a look at EV to free cash flow and free cash flow yield. And then we'll get rid of total revenue. So actually, I'll get rid of EV to free cash flow because it's all over the place again. Free cash flow yield at about 3.2%. So it's not sort of in between the range you have seen, or we have seen over the last 8 years. So it's been as high as 5%. So you want to see a higher number here. So you want to see back in middle of 2020 was a time to buy with a free cash flow yield of about 5%. So if we go to the chart of Cleanaway, so 2020 was a time to buy. Let's have a look to see if that corresponds to the chart. Yeah, so we can see the share price dropping a fair bit during COVID-19. So that was a time to buy. Now, funny enough, I would also say, when did this company list on the ASX? It was not. So this chart goes all the way back to like 2006. I don't think this. I thought this company listed on the ASX in the mid-2000s. I could be wrong. I've always assumed that. Let's go to market index. Sometimes they will say when it listed. They used to have the date of listing, but they got rid of that. Here is 3rd of May 2005. There we go. So I'm wrong. I am wrong. I'm shocked. We can go back to 2006. We can have a look at Did the name change? Oh, that's probably what happened. The name changed. Trans-Pacific Industries. And I'm wondering if the name changed in like 2015 or something like that. I could easily check that. Now, MarketNest used to have in the about section if a company had changed their name. Here it is. No, right there. I'm just looking at ticker codes, and what I'm looking for is a ticker code that is different. Here it is. Yeah. So it looks like in 2015 it was still Trans-Pacific Industries. Okay, so they just changed the name in 2015-16. Okay, so yeah, it makes sense. I for some reason I knew that. Now since then, if you have a look at the share price in relation to the 200-week moving average, it's generally been above it, which is the sign of a high-quality company. And right now it's right on the 200-week moving average. I'm just wondering about that PE ratio when it comes to Cleanaway. That's all I'm doing, wondering about that PE ratio. Okay. Some time ago, we considered BGL potential value after 2 institutional placements and a couple raising. I expect they should be able to enact the mine expansion. Is this a stock that needs to catch up to the gold miners who have been on a tear? I would say that there is a chance that this could be an opportunity for Bellevue Gold because of what we've seen in the past 6 months or so. Share price has pulled back significantly. And I'm wondering if this is an opportunity. I'm not sure if I'd say it's going to catch up, but I possibly could see the argument that the worst is now in for Bellevue Gold and it won't get any worse than it is now. But you never know. Something bad could happen to Bellevue Gold because there is a bit of uncertainty. But maybe the worst is in for Bellevue Gold. Now, I was interested in Bellevue Gold when it initially fell to about $1. Actually, it wasn't that fall. It fell back to $1 back in January. And I thought, oh, now could be a good time to buy. And there was a nice bounce. And now it's fallen below $1. So this could be the time to be interested in Bellevue Gold. Maybe the worst is in for the company. And there was another comment here about GA Education. You didn't believe he would consider GEM. They have buybacks, growing dividend, and growing pressure for public funding. The industry should be a good recession play. My problem with a company like this is they are still beholden to public policy and public, whatever you call it, changes in government policy. So that can be a problem. And I just don't think there's going to be significant growth unless they ask for more money, like for people to pay more money and the government has to subsidize that. I could see maybe that happening, but I just have no interest in this space at all. Just because there's a lot of uncertainty. And if you have a look at the chart, meh. Chart looks meh. Has been looking meh for a long time, for like 5 years. If you have a look at, say, G8, what's it called? G8. GEM, that's right, GA Education. I was thinking the wrong ticker there. You just have a look at the overview. Yeah, growth has been anemic. Revenue growth has been pretty anemic. Nice earnings per share growth over the last 3 years, though, 15.8%, but negative earnings per share growth over the last 10 years. P ratio 14.8. So maybe valuation, a dividend yield 4.2%, which is not that. I'd like to see a higher dividend yield for me to be excited. And dividend per share growth has been growing the last 3 years, but it's actually negative the last 5 and 10 years. So if we do go back here and have a look at dividend, I do like to have a look at Comsec's dividend. So yeah, dividends has started to grow again after dropping a fair bit. Yeah, so is this the start of a new trend with dividends? Maybe. But I'm just not enticed by that sort of dividend yield. But everyone's different. Everyone is different. Michael, one of the greatest names in the world, if not the greatest name. What are your thoughts on Audinate at the moment? Time to load up, average in, or too much uncertainty? Cheers. Stewpercy says, looks expensive to me. Wait for the chart and sentiment to change. Just my opinion. So I do own Audinate. I've held Audinate for a long, long time. This is one of those companies where I'm just going to put in an initial. My only problem, put in initial holding or have an initial holding. My only problem with Audinate is I should have taken profits. This is one of the instances where I saw opportunity to take profits. I went, no, I'm just going to keep on holding. And so that is one thing I've changed. I am more willing to take profits in these sort of companies when the share price goes on a massive run, which it did for Audinate in late 2023 into 2024. Share price went all the way up to $23. And I thought, oh, it's looking a little bit stretched here, but I was thinking, wow, maybe the market's right. I can't remember when I bought quite a bit ago. Share price has pulled back a fair bit. Nice support about $5. So I have not been keen to adding to my position in Audinate just yet. If I see the share price drop below $5, I could maybe think about doing that. But the daily chart, I see nothing to get excited just yet. Even when the share price has gone on runs here. So when they released that update or the results in 6th of August, share price dropped 36%. Share price didn't went on a run. No interest at that point. Share price went on a run 17th of February. Again, results. Share price went on a run. No interest at that point. Share price pulled back. So even though share price went on a run, it wasn't quite a breakout for me, just because of the chart. And the share price gone back to $6. Is it expensive? Well, if you have a look in isolation at the numbers, P ratio 152. That does look expensive, but there is potential significant growth over the next 5 years for this company. So, and it's on a fairly low base. So profits, so nice revenue growth. So revenue did pull back. That's because of all their clients build up inventory, and that's why revenue pulled back. And this is the last 12 months, and I would expect revenue to continue to growing after this little period of trouble for the company. But if you have a look at income right now, or profit, so last 12 months it's 3.3. In 2014 it was 10.4 or 10.2, and the market cap of the company right now, was it 500, 600 million? 500 million, yes. So the market cap based off their profit 1 year ago is like 50 to P ratio, not 152, just because the profit has pulled back. So I do expect a significant increase in profit over the next 5 years. So I'm willing to maintain my holding, but the question becomes, when will I add to my position? And I'm going to rely on the chart for that. So I'm fairly bullish on this company because they do have a fairly big moat, good moat. Their competitors are dying out, it seems like. And yeah. Stewpercy, with all the money printing in the world, I believe Bitcoin will be worth a lot more in 10 years. One of the attractive things about Bitcoin or cryptocurrency is it's a hedge against the money printing, and a lot of governments around the world want their dollar or their currency to be lower than it is. And the funny thing is, if our Australian dollar goes lower and lower and lower, like imports become more expensive, but our exports become more attractive. So I can understand that. But then our dollar has much less purchasing power for us personally, and that's not attractive. And I don't want our government to decrease my personal purchasing power, which is the attractive thing about cryptocurrency, because no government has control over that. So I can definitely see why cryptocurrency is beloved by some people, particularly when you hear stories. You just read stories about Lebanon, Argentina, how the purchasing power of those people in those countries have been destroyed by their governments. And the whole point of crypto is it's decentralized. I can definitely see a scenario in the future where Bitcoin is the main currency in the world, because the governments, I wouldn't say the governments have lost control, but less control the governments have when it comes to people purchasing money, and so purchasing products. Anyway, so I can definitely see a scenario play out where, Bitcoin or crypto, some sort of crypto, becomes a main exchange in the world. And the other thing is, money printing. The other thing is money printing here. That's a very important couple of words there. Money printing is deflationary for us. for our purchasing. So you print more money, so there's more money out there. So our money we have is actually worth less by definition. That cannot happen with Bitcoin. We have a certain amount of Bitcoin out there, ever. There won't be any more added. There's no Bitcoin printing, so that is very attractive, and that means Bitcoin maintains value. Well, it should by definition maintains value. We just can't say the same thing when it comes to our money, our currency, because what governments do. Forest Hill. Oh yeah, this is one about another one. I knew there was another one about MonashIVF. Thanks, Kneppy. Good idea. MonashIVF released a response to the ASX Ware letter, trying to play down the significance of the error on their financials, and then insurance will cover the cost. Potential short-term buy. So I think I've already answered that one, haven't I? I think there is potential, just potential, but there are some issues still with MonashIVF with this particular scenario. And I think it's just the name, the brand itself. Are those who wanting to have a child through IVF, are they willing to use MonashIVF? I think it's safe now. I think it's probably the best time to use MonashIVF, but that's not how people think. I knew Flying Kiwi had another question about Kaiser Reef. Yes, please. I'm looking forward for Kaiser Reef update. So hopefully I provided you enough information on my thoughts on Kaiser Reef. It is intriguing. I would say it is intriguing, but I'm not there yet. So don't forget, everyone has different convictions about different companies. Your conviction, obviously, pretty high on this company. It's your biggest holding. So you gave me your thoughts, and there's a chance I might like Kaiser if I delve a little bit deeper into that acquisition. More on CBA. Jarden's broker share surprises fundies. Jarden handled 16.5% of today's trading by volume. Oh, this is a really long comment. Oh, yeah, I'm not gonna. I did read this comment, but for some reason I highlighted it. But I'm not going to go through this whole comment in this particular video, just James Dean. But it was a good read, It's probably why I highlighted it. It was a pretty good read. Gave me some good insights to what's happening. By the way, if this is true, there are some pension funds out of Melbourne buying CBA. I would, if I was a member of that pension fund, I'd be questioning, why are you bloody buying CBA at these elevated prices? Come on. Scott mentioned CBA ripping 4% might be because the retail weak hands who sold the Trump dump, well, Institutions did now sees retail trying to catch up by buying back their stock, and prices surge because most of the shares are still owned by institutions. It could suggest low liquidity in CBA, as well as that sounds at first glance. I would expect a Wycoff topping pattern from here as those institutions start to distribute their stock to retail. I can actually see that happening. I was just having a look at the CBA chart, and I would not be surprised if this is the top, if this is the double top. You could go higher, and if it goes higher, that would be interesting. But what's the P ratio? Is like between 25 and 30. But 28.8, which is insane. The P ratio of CBA. It's irrational. It's irrational buying CBA at these levels. It is irrational. I'm going to say that it's irrational. But again, the market can remain irrational for a long period of time. I just think I think this is going to be studied in the future. What's happening with CBA right now? And by the way, I don't know much about a Wycoff topping pattern, but I do understand distribution. Institutions start to distribute their stock, and that is what happens at the top. They start to distribute their stock. Share price of CBA goes sideways as they distribute their stock, and once they're finished distributing the stock, share price goes down. Same thing happens when the share price is really low. They start accumulating. Institutions start accumulating, and the share price goes sideways, and the share price pops up because they start accumulating. So one of the things I did read in some technical analysis handbook or book many years ago. What was I doing? Oh, that's right. I was going to Google Wycoff. I have heard of Wycoff, but topping pattern. I've got to hit the right thing. Here it is. Yes, in fact, this one here. Wycoff trading method. Where's that graph? Here it is. Let's zoom in on that. So uptrend, and then you see the share price go sideways for heaps of time, buying, climax, distribution, failed rally, and the share price starts to go down, low volume rally. And then, yeah, at the bottom, we have accumulation. Yes, I do know distribution accumulation. There are signs of that. And so I wouldn't be surprised to see the share price of CBA just go sideways from here on. Yeah, there was a bit of volume coming in, so maybe that's the blow off top. Maybe that 4% day was the blow off top, whatever you call it. I want to read more about the Wycoff topping patterns. Marist. I'm wondering if I should leave out the numbers. So for some reason, yeah, YouTube will put in numbers there. Anyway, so Mara says, hi Kneppy, is GCM a one-trick pony? Relying on graphite alone, is this one of those companies you warn us about? Well, I don't know anything about GCM. Green critical metals. I saw this the other day, didn't I? Yeah, share price is up a lot, share price down. One trick pony, binding collaboration with leading data center operator, graphite. Don't forget, there is a company on the ASX called Sierra Resources who's into graphite, and the share price of this company has dropped a lot. I keep looking at their Appendix 5B, and I'm just waiting for an inflection point, and it just doesn't come. Chart is starting to look a little bit more interesting. Maybe we're starting to see consolidation happening. Share price has found a bit of support and going sideways. Maybe the bottom has been reached for Sierra Resources. So yeah, I'm not a big fan of mining companies, and I'm not a big fan of, well, I probably would prefer a more diverse mining company having their hands in different pies, because if you say you're just a sole lithium company, you've seen share price drop a lot over the past few years. But if you're a lithium company and a gold company, gee, you've done really well in one commodity, but done really well, really poorly in one commodity, but done really well in another commodity in gold. So I don't mind more diverse mining companies, but these sort of companies I don't follow that closely simply because green critical minerals is a story stop. And the story, it might be in the first few pages of the whole novel, and maybe you become really bored and don't read the rest of the novel, or maybe the story is like 6,000 pages long, and it's going to take a long time before we get to the end of the story. And who knows what's going to happen in the next few chapters. They have not released the most recent Appendix 5B. Let's go back to, here it is, on the 30th of January, they released Appendix 5B. I'm just assuming this company is not in production. And this is what I always do for these type of companies. I have a quick look at their Appendix 4C. Nothing happening there, I move on. Now, you don't even have to look at Appendix 4C. All you have to do is look at the first page. They don't talk about production at all. And that's a pretty dead giveaway that this company is not in production. So what I tend to want to do is to see a company in production or near production. I don't mind companies that are near production because sometimes you can see the share price of a company accelerate, particularly if their production is better than expected. But a lot of times, production is not better than expected. It disappoints, which happens a lot too. So there is a lot of risk buying into those companies that are near production. Okay, that's green critical minerals, one trick pony. Devshaw says, I bought Paladin at 1571. Still no joy for me. Never trust so-called market analysis from some of those famous investment houses. Still, some believe it has potential to reach around $20. Gemnock says, let's hope so. We want the premium prices to go up. Cough happening for me. So Devshaw says, never trust so-called market analysis. No, I don't trust market analysis at all. I try to make my own opinion, try to develop my own opinion, my own thoughts. And the reason I want to do that is all the success and blame is on me, no one else. I can't blame anyone else. I can only blame myself. Can only blame, or what's the opposite of blame? Only give myself credit. The other thing is, I think you do empower yourself if you're able to make decisions yourself and not let the other person make decisions for you. I think there's a lot of empowerment to do that, a lot of empowerment in that, and you learn so much more by making your own decisions. It's just so empowering. And so, in fact, it's also joyful. It's exciting when you can make your own decisions. So when it comes to anything like market analysis or experts, I don't rely on them to make decisions for me. I want to make my own decisions. And we all heard that uranium was everyone's very bullish on uranium, but the chart was telling us the uranium was starting to look weak. We saw a massive run up in uranium in 2023, got to a top in January 2024. This is Sprott physical uranium, and it's in a downtrend. It's in a downtrend. In fact, I won't be bullish on uranium until the downtrend has been broken. So that's a downtrend line. And yeah, not bullish until the downtrend has been broken. And Paladin has gone a little bit of a run because the uranium prices have gone on a 3-day run. But again, the downtrend is still in play for Paladin, even though their quarterly result was a little bit better than expected. And finally, Pifeng Wu. Hi, Kneppy. Enjoyed your videos as always. Considering the current situation, what's your strategy for gold stocks? Buy, hold, or sell? Thank you. Okay, so I do have a few gold companies. So what's my strategy? Not selling. Out of the question when it comes to selling. So if you have a look at gold, it's a beautiful chart. This is a daily chart for gold. There's no reason to be selling gold. Gold did get a little bit overextended, the gold prices, when it got to 3,500. So we did expect, maybe I shouldn't say I did expect the gold prices to pull back. We have seen them pull back, and not all that much just yet. So I think they can pull back a little bit further. I think the extent of the pullback would be about $3,000, so maybe another 10% from here. But I wouldn't be surprised to see not much of a pullback. So at this point in time, if we do see a pretty nice little pullback, that could be where I might buy one more gold company, but definitely not selling, holding for now. And if I do see the pullback a little bit more from here, I might consider buying one more company, maybe a distressed company like Bellevue Gold. Haven't decided on that just yet. Okay, that's all I have for this particular video on your answers, and my answers and replies to your questions and comments. If you have any more questions and comments, leave those in the comment section of this video or another video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.